Well, good afternoon, ladies and gentlemen, and thanks for joining me. I'll be talking today about the project that involved a survey of current practice of local government and state road and transport agencies. Some of you would have participated in the survey, and we'll be seeing some of the results of that survey this afternoon. In terms of the background, this relates to Austroads Project 801693. Which you'd be well aware of through the survey information that we sent out some months back. I was the project leader of that project, and the project manager from Austroads was Andrew Golding, who is the Director of Transport System Asset Management at Queensland TMR, Transport and Main Roads. The ARB Quality Manager is Tyrone Toole, and both of those gentlemen will be joining me with a view to participating in the form of answering questions and so on this afternoon. I'd also like to acknowledge the assistance with the survey by Teriro Makwasha, who actually helped me with the setting up of the survey on SurveyMonkey and the analysis of the data subsequently. In terms of the participation in the webinar, that has been restricted to the members of the Assets Task Force of Austroads, as well as those members of local government and the agencies that participated in the survey. Okay, I'm just trying to get this thing to move to the next slide. Okay. In terms of the study objectives of the project, the overall objective was to improve asset maintenance and renewal funding submissions using information in and derived from the road agency asset valuation systems. That's the overall aim. In terms of the direct and subtasks, we were looking at the state of the current practice in asset management, planning and long-term financial planning, and to identify areas of improvement for collaboration between asset management and financial management, and therefore to gain a greater understanding of financial sustainability indicators and their use in asset management planning. In terms of an overview for the presentation itself, I'll be dealing very briefly with the literature review, which embraced current guidelines and previous studies in the area, as well as focusing at length on the survey of current practice, which, as I've said, was aimed at local government and state road and transport agencies. And then at the end of the webinar presentation, the aim is to invite your response as participants in both the survey and, of course, the webinar, in terms of some of the questions and issues that you see coming out of this. In terms of the literature review in the project, and which led up to the survey itself, there were three categories of documents that we included in the review. The first category there relates to the likes of guidelines and manuals that are available to practitioners in the area, including the IPWIA Financial Management Guidelines, the International Infrastructure Management Manual, Austroads work, especially the Guide to Asset Management, Part 8, and of course the National Sustainability Frameworks. Then there was a whole a number of documents which we gained from jurisdictions, in other words at state as well as local government level, in terms of legislation and guidelines for asset management and financial management across the various jurisdictions. So we've also included that in the literature review itself. Finally, there's a number of documents or studies that have been undertaken in the area of financial sustainability over the years, starting with the Survey of Financial Sustainability of Local Government that was done by PricewaterhouseCoopers in 2006, right through to the National State of the Assets Pilot, which was recently done by ELGA in 2012. One thing that stood out for us from the literature review in terms of asset management and financial management is that it's definitely a two-way relationship. In other words, asset management planning focuses on asset requirements or needs to maintain and expand the current road network, while long-term financial planning involves the assessment of these needs in terms of their financial implications, which are then fed back to asset managers. So therefore, you've got a linkage between asset management and financial sustainability, in terms of the network and its requirements. And then in terms of financial sustainability, the definition that we've used is that it's based on the affordability of the organization's road needs, and it's the ability of the entity's financial capacity to meet those requirements. In terms of financial sustainability approaches, I've highlighted for you there that the one in the Australian Infrastructure Financial Management Guidelines, in terms of the core approach, in other words, an asset strategic plan being augmented by the financial sustainability key performance indicators, and then an advanced approach, which would then consist of the core plus a fully funded long-term financial plan supplemented by asset management plans on a 10-year time horizon. So that's the core and advanced approach that we've identified in the literature review. In terms of the financial sustainability indicators themselves, I've also grouped those in terms of whether they deal with the operating surplus, in other words, the difference between operating income, less expenditure, and then of course the operating surplus ratio as a percentage of rates income. And then you've got another group which looks at the net financial liabilities, in other words, total liabilities less financial assets such as cash and cash equivalents. And then of course as a ratio, looking at that as a proportion of total operating income. Another ratio in the indicators is that of the interest cover ratio, and this relates to the difference between interest paid and interest received. And that's also going to be quite important when one looks at long-term assets such as road infrastructure. Finally, there's another group of indicators, the asset sustainability, asset consumption, and asset renewal funding ratios. And there you can see the asset sustainability ratio deals with the ratio of the asset renewal or replacement expenditure to depreciation versus the asset consumption ratio, which looks at the depreciated replacement cost of assets as a proportion of current replacement costs. Finally, you've got the asset renewal funding ratio, which is the net present value of projected 10-year asset renewal funding outlays obtained from the long-term financial plan as a proportion of the net present value of projected 10-year asset renewal expenditures in the asset management plan. So those are the indicators that we've also identified not only in the literature review, in the likes of the financial management guidelines, but also sought to bring into the survey and to see how various authorities dealt with them on a day-to-day basis. In terms of the issues for the survey, apart from the background information which you all supplied and which enabled us to identify you subsequently, there were a number of questions dealing with legislation and guidelines and their uses in the jurisdictions, linkages between the asset management and financial management functions, an overview of asset management planning and long-term financial planning, and then a set of questions dealing with communication and sharing of data between those functions. There was also a set of questions relating to financial sustainability indicators and their usage, and then asset valuation practices across different types of assets, and then a set of questions looking at funding issues. In terms of the overall survey approach, as a bit of a reminder to you, the questionnaire was developed for use with SurveyMonkey, and that was how most of the respondents dealt with it. We also identified a local government sample, and this was based on apportioning the questionnaire according to population across states, and then of course splitting between urban and rural to identify a spread of urban and rural councils which could be then identified for participation in the survey. By urban, that was city councils, and rural meaning shire or regional councils. Key respondents were asset managers and financial managers, and then we also looked at a survey of state road transport agencies, and this was undertaken through the Austroads Assets Task Force. We also engaged state treasuries and audit officers, and we'll see the approach that was adopted to them shortly. In terms of the survey and its response, Urban local authorities, we received 11 responses which were completed on SurveyMonkey, which amounted to a response rate of 52% of those that were invited. In terms of rural local authorities, we received 13 responses, which was 100% of what we'd invited. And then, of course, state road and transport agencies, or state road authorities if you prefer, 4 responses. From state treasuries and state auditors general, there was a mixed response in terms of whether they could or could not respond or would not be prepared to. The other issue was, of course, that for the auditor general officers, a number of them do in fact regularly undertake performance audits of local government and directed us to those sources of information which we then pursued subsequently. I'm going to now deal with a number of main findings arising from the survey to summarize those before going into detail on particular aspects. So in terms of the main findings and the main feedback from the survey, this can be summarized as follows. Legal requirements and guidelines, we think, when used together, are the foundations of best practice. In other words, we'd received and we were able to identify that a number of local authorities are aware of and use legal requirements or legislation and have access to guidelines to undertake financial sustainability assessments. Regular asset management planning and long-term financial planning does occur across jurisdictions. We were able to ascertain that. There would also be a need, though, longer term, for greater synchronization between asset management planning and long-term financial planning in terms of the process, content, and time horizon. When one understands that asset management plans are compiled sometimes with a 20-year time horizon with reference to a long-term financial plan, which has a required 10-year time horizon. So there's obviously issues around that in terms of what the regulations and guidelines are. We have found that there was a high level of collaboration and data sharing across the asset management and financial management functions, but there were areas that we've identified where there could be improvements, especially in terms of integration of data. Greater understanding and awareness was also required of and had been achieved over time of the financial sustainability indicators, for example, through the use of the IPWIA Financial Management Guidelines, the International Infrastructure Management Manual, and of course various audit reports and guidelines at a local level. However, more awareness was required of the implications of financial sustainability indicators for asset management. So in other words, those indicators that we've looked at previously, what in fact were their implications for asset management, and how would some of these asset management approaches affect the indicators. In other words, the role of useful life, residual value approaches, the depreciation, and of course how those factors and values eventually impact on your asset sustainability, asset consumption, and renewal ratios, for example. And those three were also identified as quite important ratios for asset management. We've also identified that there was a need to complete a range of financial sustainability indicators. In other words, there were some that could be easier to compile for a number of local governments, but there were also some which presented challenges, especially the asset consumption and future renewal funding ratios, and their ability to get the data and, of course, make the necessary calculations. In terms of variation in asset classification and valuation approaches, there was some variation, as you'll see in the survey findings directly, in terms of asset classification and valuation, which would, of course, make asset renewal funding submissions difficult in the long term. And there could be areas which where it could be beneficial to have some consistency. There was also some variation in current and future revenue sources across councils. So in other words, rates were identified as particularly important as a current and future revenue source for urban councils, while intergovernmental transfers and grants were identified as particularly important by rural councils. Well, in terms of the actual specific areas where we'd identified and which we'd got results from the survey, I'll now deal with the individual findings in some detail, also referring to the survey results. In terms of legislation and guidelines, we found that as a source of best practice. In other words, it is a combination, and most local governments responded to legislation and in fact have guidelines for the preparation of asset management plans, long-term financial plans, and financial sustainability indicators. However, this was not the case overall, not in terms of all of the local governments. And of course you have the situation where state road and transport agencies are not obliged to use those or wouldn't have the same obligation in terms of legislation and guidelines for the preparation of those documents overall. What you see there is the results of the survey relating to local government legislation and guidelines. And you can see that the legislation and guidelines are in existence for the vast majority of local governments relating to asset management plans, long-term financial plans, and of course legislation and guidelines relating to financial sustainability indicators. You can also see that in each of those areas, for those three components, there's a reasonably high level of completion for local authorities, whether they be urban or rural. We've also found that there was a regular preparation of asset management plans. Half of local councils prepare AMPs according to an established format because of their experience in this area, while regarding state road transport agencies, the response was that they're in a state of transition and they're using formats which are in a developing mode. Almost all local councils and state road and transport agencies regularly prepare an asset management plan, while most councils and SRTAs prepare or review an asset management plan annually or at least every 2 to 5 years. And then of course there was something in terms of a varied time horizon of preparation of asset management plans. So in other words, with a time horizon of between 10 and 20 years. And there you can see the results specifically relating to local authorities. And then of course most of them, the responses certainly from urban local authorities was between 10 and 20 years, and likewise for rural between 10 and 15 years. There was also a high level of financial planning. Most local councils and state road and transport agencies regularly prepare financial statements, but they also regularly prepare long-term financial plans using the information from the financial statements, as well as the asset management plans. What the survey has also revealed is that most long-term financial plans were updated annually across the board, whether it's local government or state road authorities. Most long-term financial plans also have a 10-year time horizon because, of course, there's legislation frequently and guidelines relating to that, which helps the local authorities involved to use that kind of time horizon. There you see the results of the survey relating to local authority updating and preparation of long-term financial plans. You can see there's certainly most of them, as was the case with asset management plans, update the long-term financial plans pretty regularly on an annual basis, or at least every 2 to 5 years. In terms of the time horizon for local government long-term financial plans, you can see that the survey revealed that there's about a 10 to 15 year mix of completion of local level long-term financial plans. The survey has also revealed that communication and sharing of data occurs between the asset management and financial management functions, but there were areas where it could improve. The survey revealed that there was a high level of information sharing between functions at a local level, while functions within state road and transport agencies were more at a development stage and learning to work together as a matter of course on a more regular basis. The asset impacts of funding shortfalls were also shared between functions quite readily, and that was found at a local government level. So in other words, where there's a funding shortfall found by the financial management function, this was fed back to the asset management function, and then of course the implications dealt with and fed back to the financial management function eventually. However, data shared between the functions could still be improved according to the survey. There you see the results of the information sharing relating to local authorities, urban and rural, and you can see a very high percentage of them actually share information between asset management and financial management functions in terms of checking, not only sharing data but also cross-checking information in the preparation of asset management plans and long-term financial plans at an urban as well as a rural level. And then of course that goes back to that issue of a two-way flow of information from one to the other. Relating to financial sustainability indicators, the survey found that there was a wide range of indicators compiled, but there were areas where this could also be improved. We found that most local councils prepare indicators. This was found not only from the survey but also the performance audits that were reviewed. Financial sustainability indicators are also integrated into long-term financial plans at a local level, but not necessarily at state road and transport agencies. The indicators were also taken into account in asset management plans by 65% of urban councils responding and 40% of rural councils. So that's, in other words, taking the indicators and looking at it in terms of their implications for the asset management plans. The survey also found the importance of the asset sustainability, asset consumption and future renewal funding ratios as areas where there could be a need to improve possibly, especially the last two. And there were issues relating, or questions rather, as to what could be the reason for this, and the data, could there be data issues that might impact on a local government's ability to complete the asset consumption and renewal funding ratios. Most local governments do prepare financial sustainability indicators, as you can see from the diagram. When you look at the first four indicators, the operating surplus and the net financial liabilities, you can see there's a relatively high number or high proportion of local governments that complete these indicators, and likewise the asset sustainability ratio. But there was a definite drop when one looks at asset consumption and future renewal funding ratios, where fewer of the local authorities were found to be completing those particular indicators. And hence the question, what is the reason for that? Is it a question of data or complexity and availability of information, in order to increase the completeness or completion of those two indicators? Asset valuation also varies across the local government and state road authorities in terms of the asset types and how they are dealt with. What we found is that asset classifications are certainly common in terms of the main asset groups, but less so with non-traditional assets, and you'll see what I mean by that in a moment when you look at some of the detailed responses. The main asset groupings were also assigned a residual value more readily than non-traditional assets, while there was also a variation in useful life across asset types, and I'll deal with some of the results of that as well shortly. What we found across local government as well as state government, as you might expect, is a preference for the straight line depreciation method, as well as asset renewal funding submissions and capital works programs were generally held to be adequately supported by asset management plans. In terms of asset classification and the main asset groupings, you can see at the top the main asset groupings: road pavements, road surfacing, earthworks, culverts, and other structures were generally well understood and dealt with by a vast majority of local governments, together with bridges. However, when you look at what could be called different non-traditional assets, possibly traffic facilities, intelligent transport systems, traffic signals, and so on, fewer of the local authorities had separate classifications for that. In terms of an assignment of a residual value, this was definitely done for main assets. So in other words, for road pavements, road surfaces, earthworks and bridges, there was definitely an acknowledgement of a need for a residual value of those assets, but not so for the other asset types. Useful life is also held to vary across asset types. So in other words, for your long-term assets such as bridges and different types of bridges, you had quite lengthy useful lives, obviously. While for road pavements, that varied according to the pavement type. As you can see there, for unsealed pavements, 15 years versus concrete of 40 to 50 years. And then of course for culverts. And then when you get to the non-traditional assets, such as traffic facilities and traffic management systems and traffic signals, you obviously get reduced useful lives. In terms of revenue sources, urban councils, we found, currently rely heavily on rates, but also to an extent on grants, user charges, and other sources of income, such as fees and fines. While rural councils currently rely less on rates, but we found more reliance on intergovernmental transfers, grants, user charges, and other sources. Rates were also seen as future sources of revenue for urban councils, but intergovernmental transfers and grants, as well as developed contributions, were also identified by urban councils as future sources of revenue. However, state road and transport agencies obviously cite intergovernmental transfers and grants, license fees as current, but user charges, which could be also quite useful in the future. What we've also found was that across local government there was also very little reliance on borrowing or debt as a future source of revenue. In terms of the current revenue sources, urban councils, we found, were obviously drew much of their revenues from local rates, because of course they have a better rates base, while local rates were not seen as the primary source of revenue by a number of rural local authorities, or to the same extent. There was a wider variation for rural authorities, where there was also a heavy reliance on intergovernmental transfers. In one case you can see there, which would have had a much lesser dependence on rates. And then of course grants were heavily relied upon by rural councils as sources of income versus urban authorities. User charges also featured in both urban and rural councils. And then likewise, as I've referred to earlier, other income, in other words parking fees, fines, etc., were seen were also identified, I beg your pardon, as sources of revenue by some councils. For future revenue sources, local rates were seen by all of the urban councils as a likely source of revenue in the future, and that one would expect, given the current rates base and reliance on rates income. But they also looked to intergovernmental transfers, grants, and specific purpose programs, those sources of revenue, as possibilities for the future. Likewise, rural councils also had identified intergovernmental transfers and grants as particular sources of revenue they'd expect to help them in the future, and user charges to some extent. What was interesting also, though, was the relatively low reliance, I guess, on future sources of revenue coming from borrowing and debt. So there's almost an aversion to debt that we've identified there from local government as a whole. I've referred to earlier the review of published audits. That was the fallback position, if you like, when we didn't get the response that we were hoping for directly from the Auditor General's offices, for example, but they did refer us to a number of very comprehensive performance audits, because of course a number of these organizations regularly undertake audits of local government. In terms of our review, we reviewed performance audits across selected jurisdictions, and we found that most jurisdictions have audit officers that regularly undertake a review of local government performance using the financial sustainability indicators. Local governments in most jurisdictions also produce financial sustainability indicators as required by legislation with the support of guidelines. That is now a given. Performance indicators also show that the situation regarding financial sustainability of local government across Australia was sound in terms of the indicators, but the trend, interestingly enough, over in a number of jurisdictions was declining over the last few years. This obviously also poses questions over the future financial sustainability of local government as asset requirements increase and funding pressure grows. I've put forward there a number of questions which I'd like to not necessarily have answered, but at least prompt some response and feedback from participants. These are by no means exclusive. If there are particular issues that you see coming from your own local governments that you'd like to put on the table, we'd certainly capture those for our purposes. But in terms of the findings, I guess, from the literature review as well as the survey, I've posed a number of questions there. The first one relates to legislation and guidelines. Is this indeed the way to go in terms of best practice and a combination, in other words, of legislation and guidelines to support the completion of asset management plans, long-term financial plans, and financial sustainability indicators? The other question is, does your organization follow a core or advanced approach to financial sustainability? I'd referred to that earlier. That's part of the financial management guidelines, the core approach of a strategic asset plan and key performance indicators, and then of course the advanced approach, which pulls together an asset management plan and a long-term financial plan to supplement the core approach. Then in terms of the financial sustainability indicators, which are the most useful for asset management? The operating surplus, net financial liabilities, and what about the asset sustainability in consumption and renewal funding ratios? And regarding the asset consumption ratios and asset renewal funding ratios, are they difficult to compute? Is that why they aren't as popular, or at least didn't feature as much as some of the other indicators? Are there data issues? Are they appropriate and useful? And how complex and difficult are they to actually complete on a regular basis? Finally, is financial sustainability declining over time? And what are the challenges for the future? What is your situation as you've experienced it as a local government? That concludes the formal part of the presentation as such. What I'd invite now is any response or questions and key issues you may have. The questions will pop up when you type them, and I'll repeat them to the people listening to the webinar and relay the answer not only to yourself and of course to Andrew Golding and Tyrone Toole, and invite their response to the questions as well. Just while we're waiting for that, if you're able to, Andrew or Tyrone, any comments that you'd like to add to the presentation?
I might start, Cliff. Thank you very much for the presentation. Um, from an Austroads perspective, just sort of backing up some of your earlier comments, we've known for a while that local government have had legislation and guidelines around the production of long-term finance plans and married up to their long-term asset management plans. And they've also been showing generally sustainable levels of investment, so those plans have been balanced. From a state road authority perspective, we haven't had that legislation and guidelines in place to force us to produce and to align those plans. And we've also been facing a unsustainable gap between the levels of service that we aspire to in our asset management plans and the long-term funding available to our investment particularly in the road networks. So, I mean, one of the sort of the core reasons for Austroads to sort of press forward with this and to really try to engage with local government is as a learning exercise for state road authorities, and I'd be interested in exploring that. I guess the second and third questions that Cliff mentioned around going from that core asset management capability where you're using the asset management plan and calculating the sustainability measures through to actually getting them aligned with your long-term finance plan and managing both the long-term finance and your asset management planning as a consolidated piece of work. So if you have any inputs that might provide some insight as to how you can sustain, how you go about that, and particularly from our perspective, it's about adjusting service levels as much as being able to mount the case for the correct funding level. So that would be my first bit of input. Ty, have you got anything you want to add?
I think firstly, I'd thank you, Cliff, and reinforce Andrew's comments. What I've always been interested in is really how can we market, present this information, seek to engage better with funders and get them to come towards us, and have we, amongst the road authorities particularly, got some good examples of where any success in achieving increases in funding across the network tied to, let's say, supporting the kind of processes we're discussing here. The fact that the treasuries and state audits were saying, look at our documents, etc., is a bit disappointing. So it's how can we engage? That's what I'd like to see. Ideas on that front. Thank you.
Okay.
Have we had any questions come through, Cliff?
No, none that I can see.
I might add some comments, I guess, on the asset consumption ratio.
Yes.
That's one of the ones that my organisation has been calculating for a couple of years. Personally, I think it's one that we could do with some extra work on in terms of its definition. If it's trying to present a measure of the retained value within your infrastructure, it's probably doing what it set out to do in its current form. But if it's trying to measure the consumption of the asset in terms of a ratio to the renewable or replaceable component, I think it's falling short of the mark, especially when we have some asset components with high residual values, or say earthworks where they're not being depreciated. The consumption ratio can actually give you a quite misleading high value if it's not if it's being read in the context of being a measure of the overall consumption of the consumable part of the asset. So if people have comments or questions or have expressed difficulty in calculating that indicator in the past, I'd be open to get some feedback on that as well.
Right. Okay. I think there's also an issue around the understanding of those indicators by the financial management function and how they, what information is obtained from the asset management side of the organization. And that's where the importance of sharing the data and quite interesting results came in. That information is shared, but there could also be areas of improvement. And the other issue was not only improvement, but in how they can be integrated into the asset management plan. Okay, let's have a look here. Let's just say that this is also only a proportion of the results of the survey. There were a number of areas that we've had to either summarize or just provide you a very brief snapshot. There's also a lot of other useful and quite detailed information, which we'll include in the report to Austroads eventually. And not only about the completion of the asset management plans, but also the feedback that we've obtained relating to how this data is in fact put together and used, and how those functions relate to each other on a day-to-day basis, as well as what mechanisms are used by different councils to actually have that cooperation. Obviously, it's a lot easier for local government than it is for state road authorities because, of course, those functions are frequently working together on a day-to-day basis anyway. I think what it's also useful is to have a look at the performance audit material that's available. It's all public domain material that's put forward, published by the Auditor General offices in the various jurisdictions. And you can see there some of the results, and these will be dealt with in more detail in the report as well. Not only in terms of the completion of the indicators, but also the impressions and conclusions that are being drawn by the Auditor General offices as to the performance of local government in their jurisdictions. Just having a look at whether there's any questions coming through, not that I can see.
Are there any questions on the issues about putting forward better cases to treasuries, particularly from the state road authorities? Are we seeing any value in communicating with our largely financial background treasury officials in this way? Often we do it in engineering terms or in economics. Asset value is something that people believe they understand.
I think I'd also just like to refer people to the National State of the Assets report that's been published towards the end of 2012 by ALGA. I think it's got a lot of useful information. It's also drawn quite similar conclusions in some respects to what we found in our survey in terms of the completion of asset management plans, long-term financial plans, and also financial sustainability indicators. So draw your attention to that. I think it's very easily obtained from ALGA itself. Just want to check that, I'll just make sure that I'm not missing something here with the technology, with the questions. Okay, just okay. Sorry. Yeah, I don't think there's any. So I was just checking.
Yeah, that's all right. So
That's fine. All right. And